Hey there, Bram here with Buy and Hold Fundamentals. Been on a bit of a hiatus. Now I'm back. This is episode, I don't know what, let's call it episode zero. Today, I'd like to look at a multifamily property in downtown Charlotte. It's C class. Um, I've picked this up somewhere, I think on LoopNet, and doesn't involve an NDA, so I can actually share this and show this to you guys without pissing somebody off. It's smack dab in the middle of downtown Charlotte. There's a whole bunch of um, information here that doesn't really help us from an analysis perspective. I'll put a link to this offering memorandum somewhere in the show notes or below or wherever I put it, so you can look at it yourself. There are 10 single bed, single bath units. They're pretty small, 600 square feet, um, and there's a bit of parking space. Here we have what purports to be the actuals for 2017, which can be very, very useful. And in a minute, I'll show you how I've put that in a sheet, how that allows us to look at what the story is that the agent and the seller is telling us, and then try and figure out what makes sense and what doesn't. In addition, there's a bit of language here about work that was done on the exterior. I think they invested something like 15,000 bucks, 15,000 bucks. There you go. And they're saying that any additional value add would be invested internally, or we should invest that internally. And if we look a little further, excuse me, I'll just little slurp there. There's the story of the actuals. This is the pretty story of the projected future. So we're going from a 52 181 to a 71 550. And that just reminds me of something which I didn't look at when I prepared for this. I'll try and remember to go back to that. But that's if all of the things that they claim happen. So, the rent will go up a little bit. Vacancies is going to go down because there's no more construction or whatever else is happening. There is no more exterior work. So the expenses are going down and all that good stuff. What they are also saying is if we want to really raise rents, because if you look here, there's not real significant raising in rents. If you want to really raise rent, you need to invest about $11,000 per unit to renovate them, and that'll give you another $250 a month. So let's have a look what that means from a numbers perspective. I'll try and sort of gray out the rest of the stuff we're not looking at yet, and see what the broker put together. So the asking price is $1,350,000. We're assuming a 30% down payment, and we have from the actuals the gross potential income equals 108,228, which equals about $900 in rent. They're showing a 12 and a bit percent vacancy, and they claim to be making about 800 bucks on the laundry that's in the building. So all in all, the net income's coming up at almost $96,000. I've then taken all the expenses that they've detailed, and they come to 43,400, which is about 45% of the net income, which is not is low. If you want to be conservative, you want to hit about 50%, resulting in an NOI of 52 and a half. So this is where the problem starts with assuming you're taking financing, your debt service is actually greater than your NOI, which means that your cash flow is negative. Obviously, your cash on cash is negative. To say nothing of the fact that your debt coverage ratio is below 1.25, 1.3. Anywhere below that, and a bank is not likely to give you a loan. For obvious reasons, this is not a very a very attractive proposition. To add to that, here at least we're seeing a 3.9 cap rate, which is interesting to say the least. I think Charlotte C class is about 6.15, maybe 6.45 or something like that, or 6.5 cap for C class. This is a good 2.5 points lower. All right. So what would I change just with the information that they got? So the asking price is staying the same. The down payment's going to stay the same. I'm going to assume that I can get vacancy down a little bit. So I'm assuming 10% vacancy, and it'll make sense later because what they're saying about 2018 is they're assuming a 5% vacancy, and I don't buy that. What's more, I'm changing the expenses to 50%, and we get back to a very similar story. NOI has gone down a little bit. Debt service stays the same. We're still well in the red, and everything else doesn't make any sense. All right, so that hasn't changed the way that we look at this property. What about if we do the renovations that they're suggesting? So they're saying 11,000 a unit, 10 units, which means that we have to invest 110,000 in order to raise rents. That would make rents now average at 1,100, which gives us 132,000 in gross potential income. With all the deductions, we hit 120, a little under 120 in total net income. I've kept the amount of the total expenses the same, more or less, seeing as the rest of the apartment buildings not become more expensive to run as a result of the renovation. So we have a certain saving there. We're now running at only 42% total expenses, giving us a NOI of close to 70,000, which gets us into the black. But then again, we're still only making $3,300 for an investment of initial capital of almost 550,000. Really doesn't seem like it's worth our time. Cash on cash is below a point. NOI is up a little. The cap rate rather is up a little bit. It's not 516. All right, so that doesn't make any sense. So what would make sense, right? So let's assume that we are doing the renovation to all the units. So we're investing the 110,000. That gives us the similar numbers to what we've seen before. We're going to assume that expenses are the same, but our NOI now is up because our NOI stays more or less the same. Sorry. What's different here is I've changed the offering price and sort of reverse engineered it because I wanted to do two things, right? I wanted to make sure that I'm hitting about 10% cash on cash return, and I wanted to make sure that I'm above 1.3% debt coverage ratio. So I've achieved both of those by reducing the purchase price to 700,000. That translates into a 10 cap, which, to be perfectly honest, even if they're projecting 3-4%, even if they were to go up to, let's say, a 6 cap or a 6.5 cap, the gulf in the distance here is very large. I doubt that it's bridgeable. To say nothing of the fact that the investment here is rather the loan here is so small so that it's going to be a recourse loan. I'm not sure that that's worth it. And I would personally walk away from this deal. Not that I think that I'd get much of a reaction to an LOI based on these numbers. So that's it for today's buy and hold fundamentals. I'll be back with some more multifamily.